Welcome to Skyton Academy, where excellence meets opportunity. As one of the 5 pillars, our next focus is professional development. Here, students dive deep into courses like planning and execution and brace for upcoming masterclasses like private equity investing. But that's just the beginning. Soon, they'll immerse themselves in real estate fix and flip, tax lien sales, and even learn the art of business brokerage. And yes, there's ChatGPT 101 and much more. With an enrollment fee of just $50 per month, Skyton Academy empowers you to unlock your full potential. Join us. Let's soar together.
What's going on, ladies and gents? On today's episode of .Connect Wednesdays, episode 65, we're going to cover a bunch of things, right? So I want you guys to strap in and stay tuned as I rock you guys out. All right. First things first on the list is a massive day for crypto and the stock markets as the FOMC just did rate cuts at 50 bips. We're talking about half a point. What this means for the economy is that there's going to be some relief for people who are interested in making home purchases or auto loans, things of that nature, or even carrying pricey credit card debt. All right, so it's going to give a little bit of relief to the people, but this is the first time that the Fed has had this type of rate reduction since March of 2020. All right, now the reason I wanted to highlight this is because it's crypto. It's the stock market. These things typically move to the upside whenever we have rate cuts. A lot of the traditional things, they kind of fall to the wayside and people put their money into riskier assets because they're a little bit more attractive. All right. So this is where investors are going to typically move, which means there's going to be a quick pump. And the news just kind of broke maybe 1 or 2 hours ago. As of right now, the market is reflecting a lot of green, right? So everybody who was buying in the little sideways trading in the downturn, you guys are up. You guys are seeing a little bit of profits today. All right. Another thing that interest rates mean, just so we're clear, companies can borrow debt for less money and they can reinvest that money to make their business a lot more profitable. All right. It also means that lower rates mean savings accounts and other kinds of traditional investments become less attractive. That's why people like to run to the stock market and to the crypto market, and rightfully so, as we can see. All right. So next on the list, what we're going to go over is this economic slowdown. With them cutting these rates, this is a benchmark, right? But it doesn't necessarily mean that the price of goods and services are going to come down, right? It just means that they've lowered the interest rates, but we're still battling inflation itself and unemployment. So still pay attention to what's going on in the markets around you. If you guys are investors, whether it be crypto or the stock market or any other asset class that's speculative, what I want you guys to do is make sure you're doing your due diligence, make sure you're assessing your risk, and nothing that I say on this call is going to be financial advice. It's just for educational purposes only. So just make sure you guys are assessing your own risk tolerance before you make any moves. All right. What I want to cover next is going to be, what I want to cover next is going to be, I want to show you guys a chart. So this chart is going to reflect every time that the Fed has did rate cuts at half a point. This has happened 4 times total. January 3rd of 2021. We had September 18th of 2007. We had March 3rd of 2020. And then we had September 18th of 2024, which is today. All right. These are the last 3 and 4 times that the Fed has initiated its cutting cycle to half a point. And every single time, it's been like an indicator for a pump, a nice cycle. We get a quick downturn, and then the market goes green. So I want to show you guys this actual chart, just so you guys can put visual representation to it. All right, so here you guys can see it for yourself. Anytime that we've dropped rates half a point, you see it. Here are all the trends. We get a small downturn, market pumps. Small downturn, market pumps. We just had one March of 2020, small downturn, pump. Here we are right here, guys. So I want you guys to pay attention to market cycles as they normally give you guys indicators of when's a good time to invest and when's a good time to sit on your hands and just basically wait. All right. Now, next, this is something that's really important that's going on right now in the crypto community, and this involves the institutional side. So there are a bunch of rumors right now that are circulating that Coinbase is issuing Bitcoin IOUs to BlackRock. And this is what's keeping Bitcoin prices low. When Bitcoin prices kept low or suppressed, the rest of the market reflects the exact same way. So we have been seeing a lot of sideways trading and a lot of dips relatively lately. So this is a good buying opportunity for people who are just trying to get crypto on discount. But you want to pay attention to things like this because they are huge indicators and can tell you where the market is going to go after this. So Coinbase's CEO, Brian Armstrong, he denies issuing any Bitcoin IOUs. He's stressing that all transactions are on chain and they are audited and that this is just community chatter. But Bitcoin shorting speculations, BlackRock's market influence gets questioned, and Coinbase assuring their full transparency are all things that you want to pay attention to. The reason being are because BlackRock has chosen Coinbase to be the custodian for all of its institutional products, right? So that shows you the relationship between those two. You know, BlackRock is hugely buying all of the Bitcoin it possibly can. And it brought a lot of notoriety to the crypto space for the Bitcoin ETFs. So as you've been seeing, it doesn't matter if it drops $1,000, if it drops $5,000, BlackRock is buying as much of it as they possibly can. And I can understand that. I can understand why. They have institutional customers and they kind of believe in the product Bitcoin itself. They believe in blockchain technology and what it can do for the future of finance, the future of payments. I personally don't share that sentiment with that asset. I do know crypto and blockchain is pivotal, but just not Bitcoin itself. That's my personal take. All right. So there's a gentleman in the crypto community. His name is Tyler Durden. He was the one who kind of brought this, to the forefront. He basically said BlackRock can take as much Bitcoin as they want from Coinbase, and the transaction is recorded off chain, right? And he said he would like to see all of the ETF wallets. And he added Brian, the CEO of Coinbase, in that post. Now, the thing about that is not something that I don't think we would ever see. And Brian actually sounded off and said to the people, listen, I'm not sure what all this talk is about, to be honest, but all the ETF mints and burns they processed were ultimately settled on chain, and that institutional clients have to have trade financing and over-the-counter options before trades are settled on chain. And this is normal for all institutional clients. All funds are settled in their prime vaults on chain within one business day. He goes on to say, if you want audits, Deloitte does the audits for Coinbase annually. They're a public traded company. He says he doubts that all institutional clients want people dusting all of their addresses, and it's not our place to share for them. This is what it looks like if you want a bunch of institutional money to flow into Bitcoin. So I respect this response, and I want to give you guys a little nugget. So in his response, one, he addressed it tactfully. He let people know that Coinbase does get audited. He let them know who does the audits just to maintain full transparency for us, the community, because as we've seen, a lot of these exchanges and the people who run these exchanges are not honest. They're not forthcoming. They're not transparent, and they've been doing nefarious things. They take the money that belong to the investors, and they're buying yachts, they're buying homes. We've seen this with FTX and Sam Bankman and Alameda Research and all that stuff. So this I can respect. I actually can salute this, right? And this paves the way, one, for open dialogue, good conversation between the big dogs and the community itself, because these guys understand that nothing can move without us, right? It's our power, it's our buying power, it's our dollar that gets invested. And without that, a lot of these institutional guys, they just kind of won't have a position. They won't have a company to represent. So I do absolutely respect that. The second thing that I want to cover about this is, and I quote, he said, "I doubt our institutional clients want people dusting all of their addresses." Just to edify you guys, for those who do not know, crypto dusting is a malicious attack where a small amount of cryptocurrency is sent to many wallet addresses. And this is done so that they can track and discover who is the owner of that particular wallet. The end goal is to basically use the information that's gained, and then they start doing malicious acts or attacks like phishing scams, extortion, even down to blackmail. So dusting attacks, they can be used for various purposes, including criminal activities, government investigations, network stress tests. But ultimately, they want to basically be able to see these addresses, track them so they can see the movements. But seeing these movements on the institutional side is not always the best course of action. And just like Brian Armstrong said, these are bigwigs. These are behemoths. This is BlackRock we're talking about. We're talking about $10 trillion in assets. Of course, they do not want their addresses to be revealed. They don't want anything to be scrutinized to the point where that money can be taken or drained from their wallets, anything like that, right? And as a whole in the crypto market, we don't want that either. The reason being is because we want the money to flow in here. We want to continue to have institutional big players to come in here with big piles of money to kind of influence other investors and other big behemoths to come in and invest their money. Crypto is going to be here. It's the future of finance. This is stated, right? So as everyone now knows, crypto is going to be around. These big institutional guys, they're on board. They're on deck. So we want them to stay here so that more money can flow in. All right. So that is my take on what's been going on. Next, what I want to cover is FDIC, right? This is the Federal Deposit Insurance Corporation, and they just unveiled a brand new rule that forces banks to keep fintech customers' data on hand, right? Now, the rule was aimed at accounts that were opened by fintech firms that partner with banks. And this would make the institution, maintain records of who owns that account and the daily balances, right? So what I want guys to understand when you see news like this, we all know that the FDIC one covers you up to 250,000. So if your account has more than 250,000 in it, for all intents and purposes, you're cooked, right? Also, there's a rule with the FDIC is they have up to 99 years to be able to pay you out. So if something was to occur or something was to happen, 9 times out of 10, a lot of us won't be alive and well and breathing in 99 years. So that's their loophole. Also, it is known on record that the FDIC does not actually have the money one-to-one to be able to bail people out. There was a debacle that took place from a fintech firm called Synapse. And this new rule that they put out was stemming from that debacle, right? In that debacle, there was about, I think, $160 million that customers weren't able to access because they closed the accounts or they locked the accounts. and it prevented people from being able to access their money, their capital. All right. So I am all for people having proper accounting, but there's a deeper story to this. The deeper story to this is if this rule is aimed at accounts that are opened by fintech firms who partner with banks, why would this be coming right now in September of 2024? And then you have to put this into perspective. There are a ton of banks who are now partnering with fintech firms because it's enhancing the way that they do business. It's better for their bottom line, and it has better tracking and just overall efficiency on both ends. So a bank would love to partner with a fintech firm. The first fintech firm that pops into my mind is Ripple. And this isn't a promotion, but I want you guys to follow me. So Ripple, the company, utilizes XRP. XRP is the only coin with regulatory clarity. No other coin has that. Ripple also just launched a stable coin that's still kind of in beta testing. It's still being tested heavily. But here's what I want you guys to understand. If Ripple launch the stable coin, wouldn't FDIC undoubtedly want to use something that's open source, fully transparent, never has had any downtime, and it maintains a ledger of all itemized transactions? And this is something that everybody can use. Everybody has tested throughout the years since 2013. Something to think about. So what I'm hinting at is with the FDIC coming out with these new rules, it has something to do with stable coins, fintechs, and banks. The banks are going to be your cryptocurrency exchanges. We're seeing all of the currency exchanges right now. We're seeing them shut down. We're seeing them not be able to allow us, the investor, to be able to utilize the platform, especially crypto exchanges overseas, unless you're using a VPN. So if you're not using a VPN and you're here in the United States, you don't really have a place to go to besides Coinbase. Coinbase is the #1 exchange here in the United States. Now, there are others that exist, don't get me wrong, but just the most notable is Coinbase. So this just makes total sense to me. And there's a connection point that it remains to be seen, but I definitely would keep a close eye on Ripple, the RLUSD, which is the stable coin from Ripple. I would keep a very close watch on that. And I also would keep close eye on FDIC and any new rules and adjustments that they're making, because right now what it looks like is happening is people are just moving away from banks. So they're more prone to use fintechs. But if fintechs are partnering with the banks, it's still one and the same. There's no big difference, but except the fintechs are able to do things that these banks can't do at a faster pace, more efficiently, cheaper, which is benefits for the end user, right? Us. So I can respect that, and I'm definitely keeping my eyes open. One thing that I did also notice, I'm an iPhone user, right? I'm an Apple user, and I like to look for things that will educate somebody who's not inside cryptocurrency, and they'll be able to give them a little bit of perspective, because a lot of people still operate under the paradigm that crypto is a scam, right? This is a scheme. Well, you've got people like BlackRock, you've got JP Morgan, Chase, you have so many big institutions that are already here inside the cryptocurrency space, and they're utilizing the technology to be able to make their business better, right, for the end user. So to double back, I am an Apple iPhone user. Apple, with their newest update, iOS 18, now allows users to be able to send Bitcoin directly from their lock screen. This is good news right? And the reason I love this is because people who've already been using iPhones, you've always had tap to pay. You've always had Apple Pay. You've had where you can upload your debit card, your Cash App card, whatever cards that you have, and be able to just double tap the button on the side, and you tap to pay, right? But now we're implementing cryptocurrency. And right now, we already know that Bitcoin is in the spotlight. When Bitcoin moves up, the rest of the market moves up. It's the most notable. It's like the Nike to shoes, but Bitcoin is the Nike of crypto, right? So it's the big boy. It's the one everybody pays attention to. So with that being said, I wanted to bring that to everyone's attention because there are people who still are not invested in crypto, and we're still sitting at about less than 5% of the total population in the world that's invested in crypto. All right. And that has to definitely change. One being that this is a viable asset class. Crypto is changing the world, and it is impacting and affecting all things. This is going to be everyone's future norm from here forward. So I urge everyone to embrace cryptocurrency and the technology to learn it. We have incredible products and courses and things for you guys to be able to learn that. We have what's called the foundation inside Skyton Academy. Down below in the description will be links so you guys can visit our website to see all the things that we offer. You can see, all the courses that we have and partake and learn the correct way from people who've been invested and have been in this market through various cycles since 2015. All right. Now, here's something that I want to bring to you guys' attention. Speaking of BlackRock, Mr. Larry Fink, the CEO, stated that crypto will replace international currencies. I want you guys to understand how massive that statement is. But I'm going to play a video for you guys. I'm going to share this video with you.
Product can really transcend that. And that's crypto is going to be, it's an international asset. It has a differentiating value versus other asset classes, but more importantly, because it's so international, it's going to transcend any one currency and currency evaluation. If you just look at the value of our dollar, how it depreciated the last 2 months and how much it appreciated over the last 5 years, I mean, an international crypto product can really transcend that. And that's why we believe there's great opportunities. And that's why we're seeing more and more interest. And that interest is broad-based worldwide.
So that in itself should let you know when the guy who runs and is in charge of $10 trillion in assets under management, and he's seeing the different narratives that are playing out. He's seeing tokenization being the next iteration of finance. He's seeing how people are going to be tokenizing real estate, digital art, music, everything that you can think of, commodities, stocks, bonds. It's all going to be tokenized. That means people are going to have to learn about cryptocurrency. So he is familiar with the power of cryptocurrency, and he's also staking his claim. When somebody like this speaks, you always want to keep your ear to the streets. You want to pay attention to what's being said. The reason being is because a lot of times they'll drop little nuggets, little gems that can definitely change your life. But you have to be, one, you have to have the right mindset. Two, you have to know what you're doing. And three, you have to know what you're listening to, right? Or listening for. There's always going to be details that jump out at you. What he said was he believes that crypto will surpass any single currency. So think about it. Who has the greatest currency right now in this present time, right? You would say the United States dollar, right? It's globally accepted. It's a basket of currencies. that exists all around the world. Every country has their own fiat, but the one that has the biggest power is the US dollar. Now, put this into perspective. You just had about 37 or 47 more countries apply to join BRICS and BRICS Plus. When you have so many countries that are moving away from the dollar and they're tired of the way that the global policy is set up around the dollar, where you can be sanctioned, you can be cut off from oil supply or oil purchases or tariffs. You're hit with tariffs, or you can't partake in imports or exports just because of a decision of partnering with another country. People are tired. And when I say people, I mean the governments. They're tired. So what they're doing is they're adopting cryptocurrencies to be able to sidestep these sanctions and sidestep these mountain hills that the US has been putting in their way. And this definitely levels the playing field. What you want to understand is there are many powers around the world that are already adopting this technology, this form of currency, and they are moving away from the dollar, and they're actually doing transactions in billions of dollars all through crypto. So if you're not in crypto, you're missing out, one, on an opportunity of a lifetime. Two, you're really not paying attention to the information that is free flowing around you. And I strongly urge you to make a change, because sooner than later, we are already seeing the power of the dollar decline. Iran, Saudi, you're talking about Russia, they're already performing transactions in currencies that were once only performed in the US dollar. Now they're being done in local currencies. But then what happens with all those countries? They're going to, instead of using the dollar and instead of using their own individual currency, they're going to adopt a currency or a basket of currencies to allow fast, cheap, and efficient money to flow. And that's what this is all about. It's all about the speed of money. Money is supposed to move at literally the speed it takes to send a text message and you to receive it on the other end. That's how money is supposed to flow. So with banks doing wire transfers, and on average, it's taking them 7 to 10 business days, sometimes even more, for a transaction to go through, especially if it's a cross-border payment, meaning something going on from the United States to Dubai or Russia to Dubai, etc. People are circumventing that whole lengthy process, and they're going straight into cryptocurrency. So that is a huge opportunity for anybody who positions themselves properly, especially with coins that have real world utility. They solve real world problems, right? And that is a huge problem that countries are having, and people are having still to this day. Money must move. All right. So all that to say, make sure you guys are paying attention when money is speaking. If you align yourself properly, you have the know-how, you have the skill set, you'll be handsomely rewarded. All right. Now, before I get up out of here, last but not least, there's been a massive update, and this news just came out yesterday. So Microsoft and BlackRock are partnering up to launch a $30 billion fund for AI infrastructure. Now, this is incredible, because what they're going to do is they're going to establish a new investment fund focused on AI infrastructure, projected to be worth over $30 billion. The Global AI Infrastructure Partnership is going to focus on developing data centers and energy solutions that's needed for high demand AI operations. This fund is going to boost AI supply chains and energy resources, with significant contributions from MGX out in Abu Dhabi. They're an investment firm, and NVIDIA. And you guys already see how NVIDIA is performing, and you know pretty much who NVIDIA is. They're the only company that's holding up the stock market right now, right? And they're going to offer their AI chip expertise. Now, the partnership is going to leverage up to about $100 billion, including debt financing, targeted investments, primarily here in the United States and its partner countries. So, one, AI is taking the world by storm. With AI taking the world by storm, it is going to open so many doors and create so many possibilities and opportunities for everyone. Their focus is going to be primarily here in the United States. And you mean to tell me that if they're investing this huge amount of money with the number one company that's holding up the stock market right now for its AI chip development, and they're going to be building and developing data centers? Come on, guys. AI is it. AI is taking the world by storm. AI is here to stay. Innovation and technology are two things that are moving at the speed of light, and they do not care who they impact. It's going to happen, and it's happening right now. All right. So this massive news that came across the ether, I just want you guys to understand that artificial intelligence is impacting a lot of people's jobs. And though it is unlocking a lot of possibilities with machine learning and deep learning and in the fields of healthcare, etc., these bots, these AI robots, and this AI, this artificial intelligence is being programmed with as much data and as much resources that people can possibly find and dump into these projects because they know the power. It's going to replace people. And in the words of Steve, AI won't replace people, but people who use AI will replace people. But there are companies right now who are laying people off by the boatloads because they see the power of artificial intelligence, and AI is able to do the job of hundreds of people. So they're like, hey, listen, if I can program this artificial intelligence bot and we can do machine learning and I can invest money into this, then I don't need humans. So what we did was, once we identified that this is reality, this is happening right now, people are being displaced. This is not the fear monger. We're just stating the facts. What we did was we created basically a hub for all things artificial intelligence. It's a group called the AI Visionaries Network. In the description below, there's an invite link. It's free to join. All you guys have to do is click the link, answer a few questions, and you'll be granted access. Again, it's going to be it's a hub for all things artificial intelligence, from insights from professionals, people in various industries, and we're bringing you hot data fresh off the press, fresh from these industries, how it's impacting people, where are some where we're gonna identify some opportunities that people are able to spot, and we're gonna basically bring information to the forefront. Inside, we have free courses as well as some paid courses, and basically, we just understand the power of community and how important it is for everyone to join collectively to be able to grow, learn together, and develop and do what's called upskilling. Basically, learning new skills that make us more powerful in our respective fields, whether it be in our own businesses or whether we're working for somebody else. Upskilling is vital, and nobody is exempt. I don't care who it is, from the janitor all the way up to the CEO. You definitely need these skills. So that's why we formed the AI Visionaries Network, and we want you guys to join it and be a part of it. So I'm not going to take any much more of your time. This has been Connect Wednesdays, episode 65. And what we went over today was the FOMC tax cut, sending Bitcoin from your lock screen, BlackRock and Coinbase IOU rumors, the FDIC's new rule on fintech data, Larry Fink on crypto to replace international currencies, and BlackRock and Microsoft launching a $30 billion AI investment fund. I hope you guys enjoyed this. Again, we're going to have the links below. And I want you guys all to like, comment, and subscribe on this video. Tell us how we did. If you enjoyed the video, if you love the content, and make sure you guys subscribe and turn those notifications on so you don't miss a video or an update from Skyton Academy. All right. See you guys on the next one. Peace.